welcome to Policy for Normal People. Welcome back, listeners and viewers. Happy to welcome Marcus Sturdivant, Senior, back again, this time for our October monthly market update. As you know, this is our special edition of my longer version of Policy for Normal People, sponsored by my business, Amada Development Services. And this special segment is a short version focused entirely on the market, just giving you quick updates, which align really well with Marcus's wonderful tagline, helping Main Street meet Wall Street. Marcus, welcome back.
Hey, Christy, how are you?
I'm doing okay. It's been a crazy month, not just in the markets, but in life in general. But hey, we're here, so that's good. So how have you been? How are things going for you on family and everything good?
Yeah, everything's fine. I can't really complain. Just another lovely day in paradise, nice and rainy down here. So.
Oh, is it? Yeah, it's not raining here. It was supposed to, but beautiful fall colors, and I've been trying to get out and enjoy them before the rain does bring the rest of the leaves down. It's pretty nice. So let's jump into it. October has been yet another kind of crazy month, I think. I've been distracted with a lot of things business-wise and all good and everything this month, but I haven't had as much time to pay as close attention. So I love when we do these updates. I hope our listeners and viewers feel the same. It's a great way to kind of do a recap. Let's start with what's happening right now, right? There's a Fed meeting happening, I think, and there's some discussion. I saw a Wall Street Journal notification just pop up on my phone indicating something to the effect that Chairman Powell is not promising another rate cut, it sounds like, anytime soon. What do you make of that?
Right, yeah. So as we speak right now, Wednesday afternoon, the Fed just announced that they will be cutting rates this month another quarter basis point, 0.25. They decided that, but they did announce after that they will be taking this approach as a meeting by meeting approach. They won't have a chance to cut in November. That's now a live meeting, but December is the next opportunity where they would have to adjust the interest rate. Chairman Powell said that he went way back more to his position of being data dependent. There's a lack of data right now. So he's not promising a December cut. The markets have pretty much priced in a December cut, another quarter point cut, and they had actually priced in partially into a January cut as well. So.
Okay, so in fact, we've had what, a total of 2 cuts since when? Since like August, September? I've kind of lost track of what's going on there.
Right, yeah. So they had a cut last month. They were having a cut this month, and potentially a cut in December. So pretty much following the same pace as last year, where we cut 100 basis points from the Treasury, from the Fed funds rate. But this time it's a little bit different as we have less data and the job market is not quite as steady as it was. Inflation is sticky. So just a little more murky.
Yeah. So, we've been following that, you and I, talking about how there may be some latent impacts of everything from, tariffs to the Fed rate cuts and so forth. And then also how businesses are behaving and reacting in the market too, large and small. With regard to the Fed rates, again, I'm always curious about this, that, it's an incentive often to encourage home buying, it being one of the biggest investments that a lot of, normal people make, families. Have you seen any stats on that in terms of, is it incentivizing people to buy? I know that the rates in this very highly priced market of Alexandria, Virginia, where I live, I don't know what it's like where you are there in North Carolina, but prices are very high here in general and have been for a long time. It's a highly populated area, lots of demand for housing, but they are coming down. The prices of homes are coming down quite a bit. And yet I'm curious whether people are skeptical and afraid to make the jump. Are we seeing Main Street buying more homes? And when I say that, I'm specifically cutting out, kind of the uber wealthy that, could buy at any time and maybe just trying to capitalize on some lower rates. But people who truly couldn't afford those higher prices, are we seeing some movement in that with people buying homes?
Yeah, so last week they actually saw an increase in the home start applications for people looking to buy homes. We're seeing the mortgage rate decrease as we're seeing the 10-year yield decrease. It's been around 4%, just hovering around 4%, a little bit above, a little bit below it. Since the last Fed meeting's actually come down a little bit. Whereas last year when the Fed started the quantitative easing of policy for cutting rates, the actual home mortgage rates went up. So if you up there where you're seeing prices come down and interest rates come down, that sets up as a good environment for home buyers, especially ones who've been concerned about interest rates, the direction of interest rates for the homes, especially with the Fed cutting rates and possibly cutting more, is directionally down. It's actually following the trend right now. Maybe that's showing now that the overall market has more faith in actually what the Fed is doing as a whole. Also tied into the house market and the Fed with their interest rate cuts, they announced that in December 1st, they're going to pretty much stop their quantitative tightening, easing as far as the money supply goes. So they're going to stop buying treasuries, selling treasuries. They're just going to see where they're at. They think they're at the proper level. So all those things play in the flow with the housing supplies. Inflation with housing services seems to be up, and the overall inflation in goods are up. So people are looking to buy homes again. People have been wanting to buy homes, and as they see these numbers come down, these interest rates, like they look at big numbers. So when they see it come down, if you see it go below 6, like people, that'll be some kind of mental trigger as well.
You
For the 30
mentioned,
year.
yeah, you mentioned, the cost of goods, materials, things like that going up. And I know I belong to a group called Business Networking International, and the chapter that I belong to, it's a great group of folks that the businesses come together to support one another with referrals for clients and customers and so forth. But we do have home builders and home renovators in that group, and they've commented in meetings recently about how the cost of lumber and plumbing materials and things like that, copper, all these things are all skyrocketing, and it's pushing them to have to raise their prices a little bit. So it'll be interesting to see how that juxtaposed with the just buying of homes is going to be affected. The developing and building of new homes versus the selling of existing homes. Are we able to tell if new development is slowing down a little bit?
Well, I think new development is slowing down. We have a supply side issue with home buying as well. One of the
Mhm.
things when prices were rising for homes, especially with the new home bills, there was a point where you could buy a new home for pretty much the same price as a already lived in home, uh, not a used home, but someone's already been there, not a new built home just for you. And that was due to home builders concessions, right? They were giving different kind of discounts on their side to get people to buy more houses and stimulate people to invest into their houses, build houses, buy the houses that they were building, offering discount points, things of that such, and then just lower rates, trying to get down below somewhere near the market rate. So that right there affects the supply and demand. So you may see the prices coming down as you see the concessions go away as well from what the home builders are giving to people, because there's always so much profit inside of everything. The material prices are just going up in general, right? We're in the middle of this, I don't want to say trade war, we're in negotiations, trade deals, geopolitical tensions, wherever we're in right now, and prices have just gone up as a result. Fed Chair Powell was actually speaking on this morning or this afternoon as to where there is a one-time price shock. It seems like the Fed is treating it more as a one-time price shock, but prepared to act if they see that the shock reverberates and extends out as far as prices go. I like home builders in 2026.
Yeah. It's interesting how fluctuations are playing out, and of course tariffs are still landing, and then things change again, and we'll talk about that in a second, especially with relationship to China, because I know that's the kind of big war going on right now. Um, but yeah, I'm always curious, and I'm another thing that I'm curious about with Fed rate cuts is do people do we see people also taking an opportunity to pay down debt? Because the idea, I think, you know this better, you can talk to this a little bit, but speak to this a little bit, but when you cut rates, the idea is to create demand, right? So that's the housing market, but it's possibly other things too. So what can we learn from you today, Marcus, about not just increased spending because of relative to funding cuts or Fed rate cuts, sorry, but what about, is it a good idea for especially Main Street, who may incur more debt, to balance the decisions to spend more in the spurring the economy versus, I don't know, saving or at least paying down debt for sure? Do we see that happening?
So I think right now, well, I know right now we're in what is called a K-shaped economy. So like people who are uh, ultra high net worth or more net worth are going up, and the people who are lower pressed are going down. So I don't even know if saving and that even comes into play with them as far as
Mm.
it goes. As far as like Main Street is being hit, I think it's more of like we'll have a better chance to consolidate debt at lower rates, perhaps with lower interest rates. The businesses, on the other hand, they will expand their spending, taking on more debt. Usually is how they do it. Let's take an example for just like with AI right now. So people have been talking about circular investments in AI, whereas one company, as usually seems to be NVIDIA, has something to do with every AI company where they're investing into the company. And this is fine. And it's not necessarily circular. The thing is, where is the investment coming from? Is it coming from free cash flow from earnings, or are these companies also taking on more debt by issuing bonds or issuing anything of that sort to fund this type of investment? Then what's the return on investment from that? The circular aspect is that if NVIDIA invests in OpenAI or whoever they invest in, all those dollars, like I think it's like 60% of the dollar comes back to NVIDIA somewhere around or another between equity or a stake in the government's position inside this. So our businesses and our government is going to look to reduce their debt. They were just talking about with the interest rates coming down lower, they're going to look to shorten the duration of their debt, where maybe they can put out some shorter term bonds and treasuries in the effort to repay their debt. That was one of the big things with the deficit that we had. I think it just went over 37 trillion. Is that the
Mm.
cost to repay back the debt is higher with higher interest rates?
Yeah, for sure. Yeah, that's the highest it's ever been, isn't it?
The debt, yes.
Yeah. Yeah. Wow. Well, so where are we in terms of tariffs? I know that what's kind of been dominating the news here more recently is China and over raw materials, and then kind of back and forth. Where I've kind of lost track though in the last few days, um, where that's landed. Are we still in negotiation? Has anything concrete been decided yet between our two countries?
Yeah, so tariffs are still a fluid situation. They're still constantly negotiating these tariffs. They have some deals, obviously signed a couple of them, but like they announced that they were going to sign India's deal a long time ago. I haven't seen India come across today. They were talking about South Korea. They reached a deal to establish the tariffs on the autos that are coming in from South Korea and North Korea. Tomorrow will be a big day with the meeting of President Trump and Xi as they sit down and talk. That's going to really be an inflection point, maybe a historic one. Who knows? Just for where we are in the world right now. So the tariffs are still ongoing. The critical materials seems to be one of the things that we're really pushing the button on with China. China recently, I think this morning or overnight, made their first soybean purchase in maybe all year. So
Oh
that's a
wow,
sign of good faith from China
that's
as they
big.
go into these negotiations. Yeah, so it's just like
That is
tariffs
big.
are very
There was an all
fluid.
out ban for a while there, wasn't it? Quite for most of the year, I think.
Yeah, like they literally just made the first purchase of soybeans, and then so they have soybeans and critical materials. We have Nvidia, some of those technology AI things. So it's just where is it going to balance out at? I think Russia announced today that they tested a new uh, subatomic missile, like that goes underwater. So it's like
Mm.
that can't be intercepted. So all across the world, you have tariff tensions, and people are just using tariffs as a part of bigger negotiations. But all that being said, it comes back and people are feeling on Main Street. People's Christmases are going to be a little bit more expensive this year. I think the president mentioned earlier this year, maybe people have one doll instead of two. He said it tongue in cheek, but I think that's kind of what people are having to realize is people order these Christmas presents, and the retailers, they order these Christmas presents way ahead of time. So they're out on dock, like they order them in the springtime. They were ordering this stuff right when all the tariff stuff was happening. So Christmas will be a little bit more expensive this year for everyone.
Mm. Wow. Yeah. Yeah. Well, as we've been saying, I mean, it takes a while for these things to come full circle, and then with the situation of still being pretty fluid and constant change, it's going to be a while before we see the full impact, and I'm sure there's going to be a lot of back and forth. A final thing I'd like to ask you about before we sort of wrap up this month's review, and I want to give you an opportunity to just talk about anything an additional that you may have on your mind, Marcus, that I haven't put into a formulated question. But The tech giants, layoffs, lots and lots of layoffs. I worked in, as you know, we've talked offline. Even I worked in the immigration policy issue for many years, for quite a few years, and so I'm very aware that right up until recently, right up until Trump was elected again, I'd say, the Silicon Valley giants and all, and Microsoft, Amazon, Google, you name it, we're just always pushing for, we don't have enough workers, we need to bring in, tens of thousands of people on H-1B visas. And we were doing that under previous administrations, regardless of party. And now I'm left to wonder, well, if those were such an urgent need, why now the layoffs? I mean, I feel like in many ways workers are getting caught betwixt and between, regardless of whether they're immigrant workers newly arrived for these jobs, or they're native born, or green card holders that have been here, on permanent authority for a long time. I mean, it's affecting, it has the potential to affect a lot of jobs, and is. So what's going on in those industries? I mean, is it just as simple as what some people say, that some of the workers are innovating themselves with AI and other innovations, perhaps, that they're just innovating themselves out of their own jobs? I mean, I've heard that here and there, but it seems a little oversimplified to me. What do you think?
Yeah, I definitely think that's a little oversimplified to say people are just innovating themselves
Yeah,
out of their jobs, but some people are definitely doing that. But hopefully, in the term, when they're innovating themselves out of their jobs, they're like creating themselves another position to work over the job that they're creating. I did want to say one more thing about tariffs. We speak about the tariffs increasing costs. We have
sure.
to look at the tariff revenue. So there's a lot in the courts as to how the tariffs are going to play out with the revenue that could offset some of this inflation, because uh, GDP is growing. It's slowing, but it's still above inflation. That was, I think, the last reading was around 2.83%. GDP is like 3.8, so it's still outpacing inflation. But as far as so you see people like yesterday or the day before, 14,000 jobs from Amazon laid off, and the stock price goes up.
Hmm.
Rise that people see that as efficiencies in the company, right? They've spent money, they're spending money on this, they're spending money on that. All these major upscalers or hyperscalers are spending money on AI, right? So you only have so much money that you can spend uh, inside your balance. You got to earn money, you have to put it down to the bottom line profit. Some of that money goes to wherever. You have to make cost cuts, and they're cutting people, I guess, in efforts for efficiency with AI. AI isn't creating jobs, but when you hear something like 14,000 jobs getting laid off, you can't attribute that all to AI. That's not all AI. This is just, sometimes companies are trimming, sometimes companies are taking advantage of an opportunity, kind of like maybe with the price gouging when it happens, when people say our prices are going up, and it just kind of gradually happens all across the board. Companies have
Yeah.
started announcing that they're trimming. It started with Meta a few years ago. They announced that they were going into a year of efficiency. I think their stock price was like $160. It's like over $700. So just once people want to see efficiency, they want to see return on investment. So right now, with the phase of AI we're at, people are going to start wanting to see the return on their investment, and perhaps companies are saying we're increasing our investment by reducing these jobs, reducing some of these administrative tasks that people use, clerical tasks that we can just have with AI. So AI is disrupting the job industry, but AI won't destroy the job industry. It's just going to disrupt it. People have to adapt to AI. It's not going anywhere.
Yeah, I agree with that. I certainly am in that learning curve myself, and I use it all the time. I use it daily at this point. But it's an interesting conundrum for workers, though, in some cases, and not just within the tech industry. It spans out into to other industries as well, as jobs begin to change, and even the skill sets within jobs that aren't specifically considered a tech job per se. I mean, all jobs are technical nowadays, to one degree or another. So,
I mean,
yeah, it's definitely a factor.
UPS just laid off 5 digits worth of workers, and their stock price shot up which is another thing. UPS, as far as like you were talking about tariffs, their stock shot back up, or it rose back up, which could point to our economy speeding back up. The Dow Jones transportation, that's just like a breakdown of the stocks inside the Dow Jones that specifically show transportation and goods being shown. Usually, if those stocks are down, that can be a leading indicator for like recession or recessionary type signals. But it seems that those stocks are starting to recover now, which means more goods are being shipped to people. The reason it would be recessionary is if it was implied that less goods were being shipped out into the economy and people were consuming less. Since UPS, I'm expecting FedEx will probably have a good report as well, as far as like what they're delivering, volumes. Those things point to a stronger consumer and to a stronger economy.
Well, I
Right.
certainly agree with your, logic, and it's just kind of the way that things work in a capitalist system, that as companies look to become more efficient or shift investment for new opportunities such as AI or whatever else is on the horizon, it can lead to cutting jobs. But I can't help but wonder what Main Street is supposed to take away from this. Where the profits are going up, jobs are being lost, and we don't really have um, a certain sense of the unemployment rate right now, do we?
No, private data. ADP is just they're releasing a report that they announced. I think yesterday, or the day before. It's going to be some private data information. The
That's good.
Fed, the FOMC, still gets like state level initial jobless claims. They still get jolts. So they get some information. They're just not getting all the information. They can't make a fully informed decision. But I mean, if you look at the pie in the sky, you can see kind of what's going on. If you listen to Main Street, that you feel the pinch is growing there. Like Main Street's truly feeling the pressure in this type of economy that we're in right now.
Hmm. Yeah. Yeah. Because I mean, people who are not just out of work or looking for jobs, but maybe worried about losing their job. Sometimes this picture can, if you're not deep into the data and all, and watching the market every day, it's almost looks like something's askew, right? That so many people losing jobs, and yet profit is going up, and the GDP is notorious for not necessarily always having good metrics when it comes to things that are more difficult to measure. The quality of life, happiness, and well being. Um, to what extent people are they may be participating in the economy, but they might also be doing it through 3 part-time jobs if they can't make ends meet too. Sometimes the GDP doesn't reflect always how people are actually experiencing the reality of so-called growth.
Right.
So
And even on that side, you have consumer sentiment polls, surveys that are coming out that consumers maybe
yeah,
starting to get a little bit shaky, but then you get like Bank of America or Visa report and they say that people are spending as much as ever. So people are saying one thing and their pockets are doing another thing. Maybe they're being forced to spend more money on their credit cards because they don't have as much accessible savings, but money markets are also at a really high level. So
yeah, yeah. Is there still a worry about stagflation? I know there was some predicting that and concern that was going to happen.
I feel a little staggy right now.
Enough said. Yeah. Hey, my last question for the day, just because it popped into my head as we were talking about the stagflation thing, and looking from past to present, and so forth, and back and forth. Are you going to read Andrew Sorkin's new book, 1929, where he predicts there's going to be a huge crash again, similar to then?
Maybe I have a lot of books that I'm still
It's
reading.
a monster of a book,
Yeah, I
but
mean,
yeah,
I've read a good bit about 1929 too. Not obviously. I think he said he spent years writing that book, so obviously he's done
yeah.
much more in depth stuff. But I mean, like yesterday was the day the market crashed. Yesterday and today in 1929, or like the days that were the biggest days in the dip. So, but there are a lot
Oh,
more systems set up right now. Like one thing about our systems are so 1929, you had that huge crash, and then they created the Federal Reserve Act. So we create things to so that history won't repeat itself, but history is
really?
similar, right? It's like you had the 19th.
Yeah, and I think we have, and I'm curious whether those are holding up or not. I guess it's kind of something that some people say we're in danger of repeating the past in spite of the efforts to put guardrails in place. But um, I don't know. I think it's still too early to make such an ominous prediction. I don't know. What do you think?
Well, I mean, another thing, a difference between 1929 and 2025, almost 2026, is the speed and technology with which we get information. When that
That's a
stock
good
market
point.
started crashing back then, they didn't see the quotes or anything for like hours. So they didn't know what they were doing. They were flying blind. So even as we consider ourselves to be flying blind now, we're at a peak of information where it's just obtainable and available to people. So like if stuff starts crashing, you see the recoveries are much quicker now. Like we have dips and they're much quicker. So
Yeah, that's a great point, Marcus. That's so true. I mean, the advancement in communications and the speed at which it happens and the access that even the normal person on Main Street, has can make a huge difference. Yeah. So that's uh, that's a good positive note to end on, I think, today. Do you have anything else you'd like to add? Anything really burning that you want to share?
anything burning that I want to share.
I think we covered a lot.
Yeah, that could cover a lot. Just Main Street, just stay focused. Just remember that the market could go down some more, right? You
Yeah.
see,
And diversify, right? I mean, I've been talking to my advisors about two things. And some of that has to do with just my personal stage in life of being, in my mid 50s and thinking about, what kind of changes I might want to make as I look, still retirement's a long way away, but still, thinking about thinking out and, looking at dividend return stocks, that kind of thing. And then also some diversification in areas of interest into some international markets, maybe a little more, but mostly I'm getting the advice, and I'm curious whether that's what you would tell your clients too at the ABC squared. Mostly, I'm just being told, we're just let's let things settle down. Don't make a rash decision and you know make a huge change right now. Do you agree with that?
yeah, I mean, you definitely don't want to go in making rash decisions with the market's at all-time highs or when the market is swooping towards all-time low. Like you don't want to jump into that, but you can't time the bottom and you can't time the top. Diversification does help out. Every individual is different, though. It depends, like you said, you're at a certain stage in life where your investments are probably different. You're probably looking where you have a few more years with growth, and then you want to look at protecting what you accumulate. Someone younger than us, they're looking more at just accumulating the growth at this stage of
Right.
life. So they would be invested different. But yeah, if you invest in different areas and you have a diversified portfolio, you don't want everything correlated. You need some things that aren't going to work all the time. Then you should be fine. Eventually, it goes up and to the right.
Yeah,
I
for
guess
sure.
this might be up and to the right on the camera, but yeah, it goes up.
Yeah. Yeah. Thank you. Yeah, that's consistent with what I'm hearing in other places too. Well,
Oh,
Marcus, I think this pretty much wraps things up for our October update. And folks, do check out his LinkedIn page. It's the ABC Squared. Marcus gives great blog posts on there, and newsletter articles, always focused on what's happening currently in the market, and gives his take on it and what he thinks we should take away from what we see happening in the news and wherever else. So I encourage you to check that out. Marcus, I'm always honored to have you on every month, and look forward to our next update.
awesome. Yeah, and thank you, Christy. And one more thing, we'll be remiss not to mention all the government workers who are out of work right now. I know we spoke about it broadly. I'm seeing an increase
Absolutely.
down here with people reaching out and using food banks and those type of things. So they're in our thoughts. Hopefully this shutdown gets resolved before we're talking again next month, but it may not
I
be.
sure hope it does too. And I'm seeing it, living in the Washington, D.C. area, I see it acutely. I have a neighbor that just told me she was laid off, here in the last couple of weeks. So, that's not a one and done thing. And people do, I mean, it's continuing to happen that there's more and more people being let go every day. And that's still an ongoing process. So yes, absolutely. Our heart goes out to those folks and to anyone who is struggling to find work, has maybe lost their job for whatever reason. It's a tough economy right now because there are a lot. We talked about this last time, Marcus. A lot of businesses, even if their returns are still stable, they, especially smaller or mid-sized businesses, a little bit cautious about hiring. So there's not as much hiring happening as what we have seen before kind of the tariff thing started, I think.
Yeah, I've heard numbers as long as people's duration of unemployment right now is like 27 months uh,
Mm.
for duration, and the government shutdown. I think they said right now, if it ended, it has cost $7 billion. If it goes to the end of November, it'll be $14 billion.
And not to, I don't want to. I know we were getting ready to wrap up, but you're bringing up the federal workers is like it's a button, but button to push for me a little bit. Like I said, I know neighbors and friends right here living in the DC area. And of course, federal workers are all over the country. So many of them have been laid off in our national parks and agencies where things aren't getting done, and there's a lot of things not getting done that are crucial that actually literally can mean the difference between um, a life and death for some people, because not just talking about the things you think of first, like entitlement benefits, although that's important, and of course SNAP has been affected recently, but you also have programs like the vaccine injury program that a lot of people aren't really all that up on. I know about it because my husband works in the industry as an attorney. But right now, with the shutdown, you have issues where people just aren't their cases are not moving through as quickly, and everything in the courts takes a long time to begin with for important reasons, but it's even slower now. So people who have had a vaccine injury and get paralysis or Guillain-Barré syndrome and CIRVA, frozen shoulders, extreme, permanent frozen shoulders, all kinds of neurological issues. Um, some of them have been waiting for years for their case to settle, and that's only slowing down that much more because of the government shutdown. So, there's a lot of people affected that aren't automatically visible to us as we're walking down the street. You don't know a person's story and how they may be affected. Our government is big, but it serves a huge country. We're 2.5 billion acres. Not all of that's inhabitable, but a good portion of it is, most of it is. And so it's a lot of people to look out for in different ways. So it's a major problem. And I hope that I don't do politics on this show, but I hope that Congress can get its act together pretty soon.
Yeah, open the government.
Yeah, absolutely. Open it up. Let's go. Marcus, thanks a lot. I always learn something new from you every month. It's great to have these updates. I hope our listeners and viewers feel the same, and we'll be getting this out to you very soon, folks. Have a wonderful rest of your October, and happy Halloween. Hope the families and children have a good time enjoying their trick-or-treating. Are you taking your kids out, Marcus?
Maybe, I guess, I don't know. Be dressed up. I don't know if I'm going. Yeah, so yeah. Yeah, just
Yeah.
thanks again for having me on for, the October recap, November outlook, good stuff. Let them know. I really
Always my
appreciate it. Looking
pleasure.
forward to it again.
Absolutely. Always my pleasure. All right, Marcus.